Here are the top 10 tickers every trader needs to have on their watch list to have a better pulse on the market. At number 10 is USO, the ETF that tracks crude oil. Monitoring it gives you a quick read on energy costs, inflationary pressures, and global economic activity. At 9 is GLD, the ETF that tracks the price of gold. How gold trades signals investor sentiment, geopolitical outlook, and strength of the US dollar. At 8 is IWM, which tracks the Russell 2000 Small Cap Index. IWM is often more sensitive to domestic economic conditions and indicates market risk appetite. At 7 is DXY, the US Dollar Index. It gives you a read on the dollar's strength and impacts commodities, global trade, and multinational company earnings. At 6 is DIA, the Dow Jones ETF. The Dow is often the go-to benchmark for traditional investors and gives you a pulse on the health of the 30 biggest diversified blue-chip companies in the US. At number 5 is Bitcoin. Bitcoin often leads speculative growth stocks in the crypto space and is a key indicator of risk appetite in the broader market. At 4 is TNX, which tracks the yield of the US 10-year Treasury note, the benchmark for borrowing costs across the entire economy. Rising or falling yields can signal shifts in inflation expectations, Fed policy, and overall economic projection. At number 3 is QQQ, which tracks the Nasdaq 100 index, the top 100 tech and growth companies in the economy. This index also has the highest concentration of the Mag 7 and often leads the market in both bull and bear phases. At number 2 is the VIX, often known as the Fear Index. It measures the market's expectation of volatility based on S&P 500 option contracts. A high VIX signals fear, while a low VIX signals complacency. And finally, at number 1 is the SPY, the ETF that tracks the S&P 500 index. It is the ultimate barometer for the overall health of the US stock market, and every trader, regardless of their strategy, needs to have a constant pulse on the SPY. If you think I've missed any tickers, feel free to let me know in the comments.